It is Wednesday the 11th. Good morning, everybody. On our agenda today, AI is coming for wealth management. Weak retail sales set the stage for the US jobs report, and Bitcoin drops despite buying from big holders.
The gains continue to come through for the Asian markets, and the MSCI Asia Pacific up 1% in the session today. It's up about 12% year to date. Think about that in terms of the outperformance versus its US counterparts. The dollar is under pressure. We're starting to see that in the cross with the Japanese yen. The currency over in Japan gaining 0.8%. Partly, it seems as a result of a short squeeze, but also on dollar weakness on the back of retail sales. When we look ahead to further data today, of course, Nasdaq futures pointed to gains of 0.2% after another struggle for the AI and tech names yesterday stateside. The countdown to the opening trade starts right now.
Wednesday morning, good morning. How are you doing? What does the session ahead look like? I think it's really hard to call. Will it be the payroll number that finally arrives today that is going to define what we see going forward? The rest of the session will be made by that number. Or is it this ongoing story around AI, this spotlight falling from sector to sector to sector as it disrupts increasingly large parts of the US economy and the US stock market? Really hard to call, Tom. Yesterday's trade was fascinating, though. This story, this little-known software company comes out with something that could affect tax planning, and you see this huge ripple effect.
And we've been flagging this for our viewers since last week, that we are going to get more volatility. Another day, another tool being released by a company using AI to disrupt one of these sectors, to your point. The latest in the last 24 hours, stateside, we saw the impact on names like Raymond James, like Charles Schwab. Those stocks ending down around 7% by the end of the session on the developments coming through from Altruist in terms of an AI tool creating tax strategies. Look, we do not know long-term what the disruption ultimately is going to look like. But there is an assumption now from many in the markets that at the very least there will be fee compression, there'll be increased competition, and these companies will need to adjust and they'll need to innovate to outpace the kind of tools that are coming in. And again, it's not going to stop here. We're going to get more tools on the market, more disruption. And so how investors shape up to that is a key question.
Yeah, absolutely. And I was for a moment cheered by numbers out of Datadog, which is a software company. And that one really rose on the back of numbers. And I thought, oh, maybe last week was overdone and this is going to be a different story. We're only worrying about one sector at a time. And today it's wealth management and last week was software. But then we've got some negative indications for Dassault Systemes at the start of trade. And so that makes me think we've got further to fall on some of the software names. So it is still all this negativity around the losers. But interesting that the Altruist CEO, even he doesn't know, and that is the software company that you mentioned, even he doesn't know where this goes. He says, he was even surprised, he said, but we can replace any wealth management job. Whole teams will be replaced for $100 a month, was his analysis. Clearly,
sounds like he does know where it's going.
Well, that's where he hopes, maybe.
Yeah, absolutely. But it was interesting, this happened on the day that Alphabet comes out and sells huge amounts of debt. Yeah. And there's this kind of sort of second narrative which continues to evolve around what is happening with the debt levels within the tech sector, what's happening in terms of free cash flow numbers going forward. And you've got this ongoing tension between the effect, the disruption, and the huge AI build-out. And what it strikes me as is you've got Asia's going to be the beneficiary of this. Look at what, again, is happening in the Korean market and all these other markets. And then you've got the American tech sector, which is kind of broadly taking the hit. And it's amazing. This is Asia's time to shine and America's time to take the pressure, it seems.
And you wonder if it's too early for this to show up in the jobs story, but still, it's getting a lot of mentions, isn't it? And we're waiting for that data today.
So we finally get that data. It was delayed because of the shutdown. The whisper number has dropped quite sharply. I think we're at 36,000. The survey number has dropped to 65,000. So we're expecting a reasonably weak number. Hassett came out a few days back and said he's expecting a weak number. You've also got the birth-death survey story, which is going to come into the mix as well, which from a kind of statistical wonk point of view will provide some interest.
You love the wonkiness of this statistical change. This is significant, right?
It could end up being quite significant. Basically, America hasn't created as many jobs as we thought. This is a long-standing hangover, and statistics experts have been worried about this for a while. But let's park that and put that to one side. But it comes on the back of the idea that maybe actually you're seeing a slowdown in the consumer, which I think is really interesting as well. Be interested to get kind of Heineken's take on that, some of these companies that are really exposed to the US consumer. And you are getting this fear beginning to creep in because the story around retail is interesting because the market has migrated towards out of the software story towards some of the staples, but are the staples supported by the idea that actually the consumer is still spending? I don't know.
For fans of wonkiness, there are actually 3 areas of wonkiness highlighted by Bloomberg Economics. So there's the birth and deaths of the companies. There's also some new seasonal factors and annual re-benchmarking that will affect numbers from 24 and 25. So there we go. Lots of
wonky. So Bloomberg Intelligence saying Bloomberg Intelligence, we estimate payroll growth was negative for about half the months of 2025.
And some of that
negative
might come
for about
out
half
in
the months. That may come out as a result of the revisions. And to your point, in terms of the rotation, Guy, Walmart is a $1 trillion company now, market cap, above $1 trillion. It has benefited from this rotation. Bank of America saying consumer staples have had their best start to the year in more than a quarter of a century.
Walmart feels like it's reasonably well placed. Is that the trade down story? Do people, if they're not going to buy the kind of the more high-end stuff, do they trade down to Walmart? Is Walmart a negative indicator on the economy? Trades on a huge multiple now, which is interesting too.
And you do feel like we just need to hear from Kevin Walsh as well about what he thinks about the job story.
Do you think he's going to do that?
Well, not just yet, no. But that's what the market will be waiting for. Until we get that, we're a little bit lost.
We still don't know which Kevin is going to turn up, do we?
Right, indeed.
The newly dovish Kevin or the previously hawkish Kevin.
Yeah, there we go, exactly. Let's talk about crypto and what we've seen in Bitcoin. Bitcoin dropping, important to say that, because one of our big stories this morning is that we're seeing some of the big wallets actually doubling down. So some of the whales, as they're known, actually buying in. But that's not enough to necessarily just support crypto up in a straight line. But that is one of the news lines that we're dealing with this morning. I was actually more drawn to some analysis by Bloomberg Intelligence that talks about blockchain and stablecoin companies. So these are companies that are based around the technology that, of course, underpins the crypto world, but it's not really to do with Bitcoin, tangentially linked, of course, but not really. And so these are the businesses, the maturing digital ecosystems that are trying to decouple from the Bitcoin story. And to some extent, they're actually being quite successful at doing that. We've got blockchain companies up by 13% over the past 3 months, whereas Bitcoin, of course, is down by around 30% over the last 3 months. So there are more detailed, of course, conversations around this, which we continue to have with our guests.
This is the so-called the grown-ups in the room in the crypto space will talk about the evolution, the development of stable coins, the plumbing and the piping, and that ultimately is where the sustainable evolution is within the crypto space.
What are retail sales going to do if crypto continues to get hit hard? Is there a correlation between...
the macro read across. I don't know. I mean, Michael Burry clearly thinks that there is some link, isn't he, between the crypto world and what happens in the real economy, and the financial services is the way that is communicated. Other voices downplay.
Well, he talked to Andrea Felsted. She always talks about the fact that crypto is a big driver of luxury spending. If crypto rolls over, do you see an impact at the upper end of the K in that retail space that they spend less on stuff?
Yeah.
And so you start to kind of draw little interesting connections between what is happening, the AI trade, what is happening there, what happened to the crypto story. What does this do in terms of US consumer confidence? Because the US consumer is still super important. And of all of this feeds negatively back into the US economy, when does it start showing up, and is the Fed going to have to react?
We have some great voices to discuss all of these topics with this morning. AJ Rajadakshia will be as Barclays Global Chair of Research, somebody who certainly has been diving into the software story and where that takes us next. Did we all get a bit carried away last week, or is there plenty more of that still to come? Jonathan Lavine will be with us, Bain Capital Senior Advisory Partner. We're, of course, looking to the credit markets to see how this story impacts on them. What does the M&A wave do for that kind of business as well? We'll talk about all of that. Paul Markham will be with us, GAM Investments Investment Director and Head of Global Equities. And Christian Bruch will be with us, Siemens Energy CEO. Meanwhile, as we electrify grids all over the place, that is a good conversation to dive into.
Hopefully an electrifying conversation as well. Drum roll. That one was for Guy. Here's what else to think about today. On your day back, EU foreign defence ministers will be meeting in Brussels. We'll be watching that for you. Netanyahu, of course, the Prime Minister of Israel, and President Trump will be meeting in Washington, D.C. as the focus continues and the lens continues and spotlight continues to be on Iran and what the US is planning on that front. And later, on the earnings front, out of the US, McDonald's. Plus, we get software firm Snowflake. Is that a company that is more immune to the disruption that we're seeing? That's reporting later today. That will be really interesting. And at 1:30 p.m. UK time, we get the jobs data that we just walked through for you with those revisions. And at 6 p.m. UK time, the US Treasury will be pushing through the 10-year bond auction. So we'll see how well received that is as the corporates ramp up their issuance.
Was it 3 years? It was 3 years yesterday. Went down okay. OK, let's talk about the other things you need to know this Wednesday morning. Paramount has sweetened its offer for Warner Brothers, addressing some of the company's concerns in an effort to thwart a rival deal with Netflix. Paramount will cover the $2.8 billion termination fee that Warner Brothers would have to pay to Netflix if it ends the already agreed-upon deal. Warner Brothers says it will renew the amended offer and make recommendations to shareholders. US House lawmakers could vote as soon as today on whether to reject some of President Trump's tariff policies. The votes come after lawmakers last night rejected a last-ditch effort by House Speaker Mike Johnson to prevent them doing this. Meanwhile, the European Parliament is moving closer to approving a trade deal with the United States after senior lawmakers agreed there to make some changes ahead of a vote, which is planned later this month. And finally, China's factory deflation easing a little bit more than anticipated in January, thanks in part to the global metals rally, even as weak demand at home restrains a more sustainable turnaround in prices. Producer prices fell 1.4% last month from a year earlier, their smallest decline since July 2024. The Chinese authorities clearly want to deal with this deflation story. They are putting liquidity into the system. Yep. Some of that's leaking out into global markets, which is Simon White's been writing some amazing stuff about this. But it's interesting, how much more are we starting to see the effect of it, or is this something that was caused by turbulence within the gold market?
So the take on the producer prices, which came in slightly higher than expected, still in deflation, but boosted, it seems, by industrial metals and precious metals and the cost there. So actually not necessarily telling a story of higher prices being passed on to things like white goods and that demand from the consumer. So there's no real sustained evidence of that yet. Bloomberg Economics think that story may start to turn around in the second half, on to your point, around that stimulus and this determination by the US government, the Chinese government, to finally turn this around.
Yeah, and we don't hear a great deal about new policies, but there's still this anti-involution policy that they're trying to bring, that they're trying to take on overcapacity in a number of industries. I mean, property is one we've been talking about for years, about overcapacity in that industry and what that's doing to sluggishness in that sector, which is part of the weakness in the consumer story. So whether the anti-involution really changes the mood among China consumers.
But if you take a look at the money supply data, you take a look at what is happening there, you are getting, they are clearly trying to force money into the system. And how much of that stays in China, I think, is really interesting. Because if it leaks out, you basically get a liquidity event that can impact the rest of the world and impact asset prices elsewhere.
It's interesting. You mentioned the China deflation being exported to the rest of the world, and we've been on alert for that, haven't we, in Europe? Well, interestingly, Catherine Mann at the Bank of England saying that she actually sees China putting up prices to the rest of the world because they're having to be very careful with what they do in the States, that actually that is a dynamic not to be underestimated. But we'll see. There seems to be different views even at the Bank of England.
Yeah, that is kind of counter-consensus to the view right now, isn't it, that deflation will be exported and maybe China puts up prices. The money supply is really significant. I was speaking to a Chinese friend recently. He said that he's been offered, he's got friends who are getting phone calls from banks saying, can you take this loan? Because it'll help us with our metrics. Like, I don't need this loan. I don't want this loan. I don't think I've got the demand in my business to take this loan.
So you're pushing on a piece of string.
He's getting friends saying, can you just take this loan for 6 months so it looks good on the metrics of the bank?
But that's the liquidity that's being pushed into the system. They're desperate to try and get it to go through, but you're pushing on a piece of string because there isn't the end demand, as you say.
Whatever went wrong with that. Right, let's talk about some of the conversations we're going to have coming up on the programme then. Siemens Energy books record gas turbine orders as demand for power surges globally. We will talk about that and the electrification side of the business with the company's CEO, Christian Bruch. That is at 8:30 a.m. London time. Plus, European Council President Antonio Costa tells Bloomberg that the fracturing world order is driving the EU to unify markets to compete globally. More on that a little bit later in the programme. Up next, we talk all things markets and the AI trade. What is it doing to software as a service? We'll be joined by AJ Rajadaksha. That conversation with the Global Chair of Research at Barclays is up next. Please get in touch. IB plus BBTV Go. That's the function to use on the Bloomberg terminal. This is Bloomberg.
Welcome back. Happy Wednesday. We are a little over 40 minutes from the opening trade. We have a focus, of course, on what's happening in terms of the rotation away from AI once again. That was a feature in the US session. Yesterday, the Nasdaq ended down at 0.6%. Today, futures are pointing higher on the Nasdaq 100 by about 0.2%. European futures pointing lower by about a tenth after essentially ending the session yesterday flat. We have data, of course, upcoming in terms of non-farm payrolls delayed and inflation on Thursday, Anna.
Yeah, let's think about what has preoccupied markets over the past week. On Wall Street, rising fears about AI continue to pummel shares of companies at risk of being caught on the wrong side of the AI trade. From small software companies to big wealth management firms, Goldman Sachs CEO David Solomon says last week's steep drop in software stocks on concern about competition from AI was likely overdone.
We have software exposure, but I'd say it's insignificant in the scale of our overall platform, but it's certainly something that we're monitoring. I think the narrative over the last week has been a little bit too broad. There'll be winners and losers, and plenty of companies pivot and do just fine.
Joining us now to talk about this theme and much beyond, Ajay Rajadaksha, who is the Global Chairman of Research over at Barclays. Ajay, really good to have you with us. So, overdone, too broad, we've heard that view before, and yet this theme of losers of AI moves from sort of subsector to subsector, seemingly on a daily basis. Mm-hmm. Is it all overdone? Is it all, does it make sense to you?
I think it is overdone and it makes sense to me, if I can go in both directions. There was a big inconsistency in last week's market moves because on the one hand, you had the market freaking out about the extent of AI capex by the likes of Amazon and Alphabet. They both got penalized after they released their numbers. But at the same time, you had all of us believing that AI adoption is so quick, so impactful, that, look, it's going to take to the woodshed an entire software as a service, the entire sector. Now, only one of those stories is right. Either AI matters or it doesn't matter. And I'm very much on the side that it does matter. There is going to be a bunch of winners and losers. This is not going to be the last time. And it was over.
OK, well, we had some voices around the table last week saying both of those things could be true at the same time. We'll explore that in just a moment. I'm drawn to a red headline across the Bloomberg terminal that tells me that Elliot Management is building a significant stake in LSE Group. This is according to the FT. And I mentioned this, Ajay, not to dive into the specifics of that company, but because it prompts the question as to whether this is some kind of buying opportunity. This was one of the stocks that was beaten up last week. Do you see a buying?
Yes.
Do you see a buying opportunity?
I do. So if you look at the broad index, what is the SAS index, right? IGV, which is everyone looks at. The big names are Microsoft, Palantir, Oracle. Nothing on their side has been impacted. Now the cybersecurity firms in SaaS are going to do just fine. They will actually have more business. What is called vertical SaaS firms. SaaS firms that concentrate on banking, on a particular industry vertical, they will do just fine. It's the horizontal SaaS firms which cater to smaller and medium businesses where you have the risk that a 200-person company says, you know what, I'm not paying these expensive licenses. 3 vibe coders sitting in my mom's basement will do as good a job. That's where the risk will come from.
Ajay, good morning. Isn't the risk also on the earnings front that in terms of forward, we're looking at forward earnings, if you're looking at 30 times, you have to just pull that forward. You have to halve that because whatever happens, there is going to be more pricing competition. There is going to be a squeeze on margin. The moats that these legacy companies have are going to be challenged more. The earnings seems to be, we have to make those revisions. Is there a case for that?
I think in some subsectors of the SAS world, yes, not in every place. There's this concept called system of record for big companies like ours, for example, right? We are conservative IT buyers. We are not going to touch an existing system that works well just because we get something a little cheaper. If that comes with security and compliance issues, trust me, we won't.
Yeah, so that brings us to a point about the kind of data and security. Mm-hmm. So is that where you look to kind of the industries or companies that operate in highly regulated industries, that there is some ballast there?
That is exactly correct. So the banking sector, as a client, the banking sector, the government sector, pharma, these are the kinds of industries that will not take a chance. That they'll say, look, fine. Maybe you can call up one of our vendors and say we want a little bit cheaper. Maybe we want 2 fewer seats, but that's about it. And it's not only one way. There are going to be new businesses created for SaaS companies also. 2022, remember when cloud took over? That was also supposed to be the death knell for software as a service. Then 23, 24 they bounce back, 25 they go back. This keeps happening. I don't think it is definitive in any way, shape, or form.
Just want to check. You're a macro strategist, right?
I was.
How easy is this stuff to understand?
Now, to be fair, we all became armchair COVID vaccine analysts at some point.
Yep.
We all took a crash course in nat gas in 2022. So, it does, but this time is more pronounced, and it does. The United States is in the early to middle stages of the single biggest industrial investment cycle since the Second World War, and it's coming from only one sector. That doesn't happen to that extent,
Normally, history kind of goes up and down those kinds of... Is that going to happen again? Because that's the macro view.
History doesn't necessarily repeat, it does tend to rhyme.
Okay.
So, you remember in the early 2000s, for example, you had the death knell of brick and mortar retail. E-commerce is supposed to kill anything.
Yeah.
You just mentioned it. Walmart just became a $1 trillion company. Yeah. And Amazon, the flagship of the e-commerce side, is a multi-trillion-dollar company. The winners and losers are not clear for years and years. You're going to go up and down inside.
But in terms of the current cycle, which has driven equity markets, which is driving so much of what is happening in economic activity in the United States, is that sustainable?
Look, I'm lucky if I get the next 3 months right. I'm telling you, for 2026, not a single one of these hyperscalers are pulling back. They're going to spend money hand over fist. And it is very hard, no matter what Bitcoin does, for me to see the US economy take a significant dip in that environment.
Okay, so not too much of a link between that and luxury watch sales, or maybe that's all the link is. AJ, but going back to something you said earlier, it is conceptually possible, isn't it, that we are overvaluing hyperscalers and at the same time overselling SaaS?
It absolutely is possible, and I think there are parts of SaaS, like I said, that we are overselling. We are throwing the baby out with the bathwater. On the hyperscalers, honestly, big tech is the miracle that keeps on giving. These are such fantastic profit engines. And remember, the market is not questioning their valuations right now because of their earnings power. It's saying you're spending too much on AI. That tends to be the point of discernment. That I have a strong view on. They're spending because it's justified. So if you want to sell a Microsoft, you better have a strong view on their earnings collapsing, as opposed to their AI spend not being justified.
Isn't it would kind of debating the upstream versus downstream? Does the upstream ultimately end up subsidizing the downstream?
In most technologies, it does. So when ride-sharing took off, for example, right, for years and years, I ran around New York City in $5 cabs subsidized by Uber. So yes, that tends to happen in early adoption. This time, I think it'll be less so, because this phone in your hand, right, it's not a new technology. You grew up with it. It just does more magical things than it used to. I think the adoption is the J curve, so to speak, is going to be much, much quicker. And I think it turns profitable more quickly.
Ajay, it's been a lot of fun. I appreciate you coming in. There's a lot to work through, but that's helped to at least clarify some of this complexity around what's happening in the SaaS space. Ajay, with that view, of course, Rajadakska, Global Chairman of Research at Barclays.
Reminds me of that conversation we had at the end of last week. Nobody's going to be vibe coding their payroll, I think was the way that it was summed up. The point being...
Which aligns with Ajay was saying.
Yeah, exactly, that there are very serious things done by very serious businesses that, you need to use trusted providers to do, and they're regulated.
But payroll's one part of it.
Yes.
There's a lot of other parts of what these companies do. And
we just don't know the answers.
Well, are you willing to vibe code travel? Are you willing to vibe...
right now, San Francisco is obsessed with using open source agents, and they are connecting all these to their data. They're making... we can assume that agents are going to be doing a lot of this work for us.
Yeah.
It's just how we get there and who loses and who wins on the back of that. Yeah. But it's very easy to see right now that agents are going to be doing our financial homework for us, doing our travel bookings for us, and doing a lot of our work.
Horizontal versus vertical. That was the bit that came out. I'm fascinated by that.
Coming up, wealth management stocks. We stay on this theme. Sinking then as investors fear the business could be at risk from automated advice. We're going to talk AI and get another perspective with Bain Capital's Jonathan Lavine. That is next. This is Bloomberg. Welcome back. 30 minutes from the start of the opening trade. European futures pointed lower by 0.1% after a flat session on Tuesday. US futures looking a little brighter after a bit more selling pressure yesterday. Nasdaq 100 futures pointing to gains of 0.2%. S&P E-minis pointing up by 0.2% as well.
Let's talk about the bond markets in Europe. We see a little bit of bond buying of sovereign debt as they just open up for Wednesday's session. The story yesterday out of the States was a 1 month low on the 10-year yield, acting as a little bit of a haven maybe when we got that retail sales data coming out stateside, certainly setting us up for the data today. The data event, which is weird for a Wednesday. I can't get my head around it.
Yeah,
we've got non-farm
should be on a Friday.
Yeah.
First Friday, should be on Friday. If you just move it to the next Friday, that'd be great. As we've already discussed, yesterday's session in the United States saw wealth management stocks hit hard after a new tax strategy tool called Hazel was rolled out by a little-known startup called Altruist. The startup CEO, Jason Wenk, said even he was surprised by the scale of the reaction, saying, it's dawning on people, this architecture we're building, using to build Hazel, it can replace any job in wealth management. Usually these jobs are done by entire teams, and they'll be done with AI effectively for $100 a month. It's the latest in a series of AI-related sell-offs that have, in particular, hit software stocks and those of alternative asset managers. Pretty hard. Joining us now to discuss what we're seeing, Jonathan Lavine, Senior Advisory Partner at Bain Capital. Good morning.
Morning.
Nice to see you.
Nice to see you as well.
What do you think of AI?
I think it's going to be big. One of the things that I think people need to understand is a lot of these visionary things are going to take time. We don't have nearly enough energy, nearly enough compute. Unseating software that has been in place for a long time doesn't happen like that just because there's a good replacement. There's human behavior, and then there's a regulatory component to it. Wealth managers are called RIAs, Registered Investment Advisors, and how that R comes into play and what regulatory framework around rolling out these things, I think, is a lot more nuanced than, wow, there's a new tool. That's why even the CEO said he was surprised.
Yeah, a little surprised by the reaction that we're seeing. I think Wall Street's surprised, but it is substantial. I think it was 2011, Mark Andreessen said software is eating the world, or something along those sort of lines. Since then, private equity, private credit has gone big into the software sector. It's been a great trade. It's worked for 15, 20 years. Is that trade now over? Is it going to be tougher to make money in the SaaS sector, in the software sector, in the way that it was? We were just discussing horizontal versus sort of vertical. Do you need to be in vertical, not horizontal? How's it going to work going forward?
Yeah, so I think the old adage, too much of a good thing may no longer be a good thing, but that doesn't mean that you can't tool it back. So we talk a lot about supply and demand, and so many. It used to be a certain kind of software could hit the market, and then a certain amount of leverage. Clearly, the markets have gotten slightly undisciplined, and when you look at the dispersion of the ownership percentages of BDCs, some of them own 37% software, and some of them own 12%. And therefore,
how are you guys feeling?
We are at the lower end because
Nearer to 12.
We are at 12 in our BDC, I believe, That's not to be critical, because there could be people who have different teams, different ways they're structuring it. But the one thing credit investors need to always remember, do not buy credit on an equity story, because what pays you back is the credit story. And therefore, the person who is looking at the risk reward on some sort of equity story is very, very different than a credit story. And I think that those two have come together a little bit. I don't think it's quite as catastrophic as the markets would suggest with all the sell-off. I think what happens is people say, okay, there's a revaluation, I've rethought this, everything sells off, then people effectively do their work, and then it will reflate back. And you've seen that in so many different types of asset classes, and even in very extreme circumstances, mortgages versus CLOs back during the credit crisis. Anything with a C and an O had it on it sold off. None of the CLOs got in trouble, but until people figured that out, they just traded them all off.
Jonathan, good morning. Are you seeing, in the deal-making space, are you seeing a repricing then of assumptions around growth in the private space? So
what I think we're seeing more of is a broader band of outcomes. I think that your upside tail and your downside tail just got a lot wider, because there is a component of AI, of automation, and just speed of change that is different than we've seen perhaps ever. And I remind the team that the average of this and this and the average of this and this is the same thing. And I think we're seeing the number of cases that you're running move out a little bit. So how you think about downside protection, how you think about what you will loan to, and how you think about saying no. And I think that the answer is, one of my partners had a great line once. If you don't know whether there's zig or zag, maybe you should just stand still for a minute.
Are you seeing covenant stress in this environment?
We are not yet. We are not seeing defaults increase, but we are seeing an incredible amount of anxiety because as you've seen, some of the things that will cause that stress happen so fast and are so new and come out of left field. But right now, creditworthiness seems pretty good. What we are seeing is just a lot of dispersion in spread. You look at the aggregate spread levels, but even within software and within the high yield indices, the difference among in really quiet markets, everything trades together. And now you're seeing a wide dispersion. And we've actually seen that spread coming out in software for almost 2 years.
Good morning to you, Jonathan. So we've talked a lot about the things that are worrying us. What about the opportunities that this might throw up? Is this sort of dislocation in markets? I appreciate we were talking about equities, but changing assumptions, the fast pace of change around AI, is it throwing up opportunities for your business?
It is, and I think it creates opportunities in multiple ways. One is helping us make better decisions and faster decisions, not replacing us as decision makers, but being able to use these tools to look at all the decisions we've made for the last 40 years, load up the investment committees, look at packages, and look cross-firm and see if we can develop any insights that we've developed that we may not have fully understood. The second thing is, within businesses, in our private equity businesses, they've been able to use AI to help speed to market for some new product launches within the portfolio companies. Thinking about customer service and how to deliver that in a better, faster way. So there is definitely a positive and a negative to every single thing. And I think you have to think about, the sort of three branches. I think about how we make decisions, how we operate our business, and then how industrial companies and the companies we invest in are going to operate their businesses.
You were here, I was looking back, Jonathan, you were here on exactly this day last year, and we were all preoccupied by tariffs on the 11th of February last year. We were talking a lot about tariffs and all the stress there, and you had some very good advice. You said, study the possibilities, but only react to the reality. I wonder how we translate those sort of wise words into this year's volatility, which all seems to be around AI and the losers at the moment from AI.
I think it's the same philosophy. I quote a framework I learned in business school quite a bit, which actually came from how they taught fighter pilots how to do dogfights in the 50s. It's called the OODA loop, and it's observe, orient, decide, act. And it's a loop because you have to keep doing it. So first thing you should do is figure out where observe what's going on. Figure out where you are. Decide what you're going to do. Act, because a decision without action is just an opinion. But it's a loop. Do it again and again. And that is how good investors react to fast-changing markets. You have to understand that there's no way. If you're just in the random predicting business, it's gambling. But if you're in the constant analyze, decide, act, and then do it again, I think that's how you deliver the best investment strategies. It also helps avoid panic.
Yeah. How often are you having to loop?
As often as new information.
Is it accelerating more quickly?
Yes. I mean, as often as new information presents itself.
Yeah. Just quickly, you're seeing these big deals coming through. Yesterday it was Alphabet in the credit markets. Does that have an effect if the big hyperscalers are coming in and delivering a lot of credit into the market? Does that have a ripple effect, a portfolio effect elsewhere?
I think it does in the retail funds. I think the private credit is a huge market now. Sure. So there's very big, there's LBO, there's middle market, there's small cap, and therefore at the very high end where you'd see retail and a lot of insurance money, it might suck some stuff up, but some capacity up. But I used to tell people that Apple Leisure and Applebee's restaurants all have Apple in the name, and they're all at one point private credit issuers, and they're very, very different buyers of those.
One final quick question. You're no longer involved in the Celtics?
I am not. But still a fan.
But still, Jason Tatum coming back early. This is the question that my kids are obsessed with. Everybody's obsessed with.
He hasn't checked with me, but he is actually going to be working out with the G League team, with the minor league team, starting this week, I believe. So it looks like
that's a positive sign.
That is a very positive sign.
Oh, playoffs are coming.
Yes, and I look forward to seeing them.
Very nice to see you.
Thank you.
See, this is the question Guy really wanted.
I did. Yeah. He knows. I know he says he doesn't know, but he knows more than me.
Once we sold the team, I wasn't sure he'd have me back.
Thank you so much for coming. We appreciate it. We'll put you in for this time next year, same date.
Absolutely.
Jonathan, thank you very much. Jonathan Lavine, Senior Advisory Partner at Bain Capital. Coming up on the programme, Heineken cuts 5,000 to 6,000 jobs as it contends with a slump in demand for alcohol. We will talk about that broader trend. We'll talk to the Dutch Brewers CEO. That's next. This is Bloomberg.
Welcome back. Now, Heineken is to cut between 5,000 to 6,000 jobs as it contends with a slump in demand for alcohol. The Dutch brewer said total volumes fell 1.2% in 2025. Let's bring in the CEO right now, Heineken CEO Dolf van der Brink. Dolf, good morning. Thank you for joining us on the back of these earnings. We'll start with the jobs point then, because this was one of the key lines that came out. 5,000 to 6,000 jobs. Where will those job cuts be concentrated, and why do you feel the need to make these reductions?
Very good. Good morning, and thanks for having me. Well, as we presented at our capital market event late October, our first priority is growth. Our second priority is productivity. We have committed to ongoing savings of 400 to 500 million euros a year. And this announcement of today is the first major operationalization of that commitment. And so a combination of announcements that we have already made, like the restructuring into a more lean and mean global head office, scaling our business services faster, as well as local for local productivity savings. So this is a global figure. Given the size of our business in Europe and given the amount of fixed costs that we're carrying in Europe, a relative large proportion of these job cuts will fall within the European region.
Dolf, good morning, it's Guy. On the back of that, volume continues to decline, but there are maybe signs that it's declining at a slower pace. Is that what you are now seeing? Are we seeing a bottoming out process, or is it just a slowdown in the decline?
We remain prudent on the short term, and we remain confident on the mid to long term that the category will return to growth. It's really a tale of two stories. We see our growth algorithm in emerging markets very much alive, where demographics, urbanization, GDP per capita is driving an increase in consumption. We have key markets like Vietnam, India, Ethiopia, South Africa, Latin America markets, which tap into that trend. The other tale, of course, is the more developed markets like Europe and North America, which seem more challenged and where bigger and bolder innovation is needed. Case in point being our Heineken 0.0, which locked in the 7th year of mid to high single-digit growth in the important US market.
Okay, good morning to you, Dolf. So if that's the story, emerging markets versus developed markets, is the alcohol moderation story in developed markets, is that going to result in you being more EM and alcohol-free focused as a business?
I think in a way these growth drivers have been there for a while. If you look to the focus of our M&A for the last 5-6 years, we did a big deal in India, which arguably is the biggest remaining opportunity for very fast growth. A big deal in Southern Africa with Distel and Namibian breweries. Very recently, very happy to close at the end of January our acquisition of Fifco in Central America. So we are deploying our additional capital in growth markets with good fundamentals. And in the more developed markets, it is really about premiumization, which remains very relevant, and we are a global leader. Low and no is still, on a global scale, a couple percent. In important European markets, already 5%. And key key specific markets like Germany, the Netherlands, Spain, it's already 10%. So we believe this low and no and 0.0 beer has still really years and years of growth ahead of it.
Dolf, you've been at the helm there at Heineken for, what, about 6 years? It's been announced you're going to be stepping down. Should investors expect a strategic shift from whoever takes over, from your successor? And what is the shortlist down to?
Yeah. So, first of all, I can't comment on the second part. That's not in my hands. That you should ask our supervisory board. But rest assured that this is their top priority to find and identify the right successor in the shortest possible time. On your first part of your question on the strategy, it was very explicitly stated by the chairman of our supervisory board, Peter Wenning, that the strategy stands. It's compelling. It's clear. We announced it at our capital market event in Seville in late October. I've been speaking with many investors around the world. There's a lot of buy-in on it, and it's now really about accelerating the disciplined execution of that strategy, and our announcements of today are very much in line and in the spirit of that commitment.
Dolf, final quick question. Others in the industry have pivoted to the soft drink sector. Do you think it was a mistake not doing that?
Well, we have been a proud soft drink bottler for many, many decades across different parts of our footprint. About half the volume of the FIFCO acquisition is actually a major Pepsi bottlership in Costa Rica. So if you look to the more recent deals, it has been more multi-beverage, whereby in South Africa with Distel, it was about flavored malt beverages, about ciders, wine and spirits. With FIFCO, it is beer, which is key, of course, and remains key, but also the soft drink portfolio. So this is really something that we assess on a market-by-market basis.
Dolf, thank you very much. Thank you for your time. Heineken CEO Dolf van den Brink, thank you very much for joining us today and on all the other occasions as well, 7:50 here in London. Let's talk about the broader markets in 3 minutes and speak to our Markets Live executive editor, Mark Cudmore. Mark, we have been preoccupied by software stocks, the supposed losers from the AI trade. Today we get to preoccupy once more with data. There was retail sales yesterday, came in a little weaker than expected. How are you setting things up for the jobs report later on today?
Yeah, I think we've got the jobs report today and we've got CPI later on this week. On the back of retail sales, I'm slightly worried, we've talked about this a bit, that I think that the data is going to have a little bit of a stagflationary whiff about it. As I said, I'm generally pretty bullish on global growth this year. And so I think this phase passes, but I think that's the dynamic we get this week between retail sales, the jobs report today, and CPI Friday. So in terms of markets' reaction to that, maybe it's a little bit more into next week. But I think that stagflationary idea is going to worry people a little bit. See ongoing steepness in the yield curve as a result. Something we've talked about this week, I've been shocked by the strength in long-end bonds. I'm on the back foot there, but I don't see that kind of sustaining. Maybe in the short term, long-end bonds do okay if we get very weak data today. But I think that the secondary move, once we get CPI and into next week, will be steepness again. And because of that, I still think the dollar probably stays under pressure. And I reckon the dynamic is not great for stocks and risk assets.
OK, yeah, to your point, Mark, good morning. The dollar down, the Bloomberg dollar index at least down 0.2%. We're seeing a rally for the Japanese yen, up 0.7%. Is this a short squeeze for the yen, Mark? What do you make of the trading action around the FX space, particularly in Japan? Yeah,
what's happened in the yen is really remarkable because it's quite contrary to what most people expected. It's one of those things where a short squeeze starts developing its own narrative. I'm seeing increasing reports come out from the sell side, kind of explaining this as the big material shift in the yen. Now, we know that always for the last 6 years, the macro community is dying to get on the long yen trade. They've called 20 of the last 0 big turns in the yen. This could be another one. What I've found in these dynamics is they can last for some period of time. So even though the yen may go back into it's been in a depreciation trend for the last 6 years, it can get rallies that last for a couple of months. And it kind of feels like that might be the dynamic here where people are excited, partially because people are expressing it via dollar yen, and dollar has its own bearish scenarios. Personally, I think that the dollar weakness is the much longer term sustainable one, but I think people will see more dollar yen downside in the short term.
Mark, how do you feel about the broader price action?
I'm hating it. I'm feeling really grumpy at the moment, Guy. I get grumpy when I don't feel I understand what's going on. It goes back to being when you're trading and you're making money, you're calling things right, and you start calling more things right because you start seeing it clearly. When you lose money, you get defensive, you start making poor decisions, you get cortisol in your brain. It's the same in the seat now. You feel responsible for the kind of the calls you make. At the moment, things aren't making sense to me, and I find when things aren't making sense at the moment, and it's not because I'm losing money because I don't have a P&L anymore, it feels that that's when things are feeling more dodgy and you get more dislocations. Now, those dislocations can go in either direction, but given the backdrop of the data expectations we get and the rotation we're seeing in tech stocks, I am worried that equities have a big move downside in the next couple of weeks.
OK, there's the concern. We hope your own personal mood shifts as well to the upside.
I felt like
Mark.
therapy.
It would,
I felt that was helpful.
give you a collective group hug.
Confessions of a recovering trader.
Can I just, he's not alone, though. So many of the conversations I'm having at the moment are mirroring that. Like, I keep having conversations in the green with guests, and they're just like, I don't know, I'm really confused, I hate it, I'm really not enjoying this experience.
Yeah.
So many people are feeling like this.
Every time we wake up with fog over all those tall buildings in London.
We're going to try and cut through the fog. We're going to try and cut through the fog. We have more conversations like this, and hopefully some clarity and guidance. And hopefully Mark feels it a little bit better. Mark Cudmore, of course, leading our MLive team, and of course you can continue to get updates from them.
I think he's probably not feeling the rugby team as well. Losing to the French, I think that ties in as well. Hangover. He's not here to be able to talk about that.
No, so
you can take that pot shot.
Right, we should talk about some of the stocks in focus. Dassault Systemes, that could be a real loser at the start of trade.
15%.
That's back to the software story. Siemens Energy, we are going to talk about this in more detail, but that could be, I've seen suggestions it goes higher. And LSEG, of course, we've heard about an activist investor taking a stake, so we'll keep an eye on that one.
Plenty of single stocks to continue to think about. Is this a single stock market? Is it? Do macro traders have to be micro analysts now? I think that feels like the trade that we're getting into. Anyway, that's what the market looks like. We'll be giving you the market open shortly. This is Bloomberg. Welcome back. We're about to open the markets here in Europe. What did yesterday look like from the US point of view? We started there, we finished all the way down over there. The software story was once again present. This time it was the wealth managers that basically took it on the chin. Today we get payrolls, which is going to be the big feature of the landscape going forward. Do we return to thinking about what happens with the macro picture? But more broadly, if you zoomed out, what you would see is a market that just continues to go sideways. Trying to figure out what happens next is really difficult at the moment. So the market feels like it's just marking time. Yeah, we're getting oscillations on an individual basis in single stocks and at sector levels, but the market more broadly, Tom, just drifting.
Yeah, that sense of treading water is still there, and you can see that reflected in the futures picture. Then European 50 futures pointing lower by 0.1%. We're still near those record highs, of course, for European stocks that have outperformed year to date their US counterparts. FTSE 100 futures looking to gains of 0.2%. We're looking at oil prices higher, silver higher as well, so maybe that lifts the energy and mining stocks on the FTSE 100. DAX futures pointing to gains of just 1 point. There you go, talking treading water, currently unchanged. Anna.
Yes, absolutely. It doesn't do justice to the underlying stories, does it? Let's talk about some of those stories, because we could see a great deal of movement in some of these stocks, at least. Dassault Systemes is in focus, the software company, of course, giving a weaker than expected sales growth guidance number for 2026. That on top of fourth quarter results that missed estimates, so that's adding up to something a little bit negative perhaps there. Siemens Energy, on the other hand, first quarter earnings beating, strong orders, and interestingly, they're saying 25% of gas turbine orders are tied to data centres, a theme we will pick up when we speak to the management later on. And we'll watch LSEG, LSE Group. The FT is reporting that Elliot Investment Management has built a significant stake here, trying to, quote, engineer an improvement in the performance of the business. So we'll certainly watch that one, Guy, as well.
Absolutely. And that comes back to the other story as well. LSEG in that kind of mix in the software narrative that we're watching so carefully. Right, here we go. Let's show you some numbers to give you an idea of what's going on. We're not expecting the index story to be very exciting. In fact, we haven't got all of the index story. There you go. The FTSE 100 is up. The stock 600, we will wait and see what it does in just a moment. But we're very, very kind of sideways at the moment, and that kind of feels like the narrative that we're operating with at the moment. It's hard at an index level, a top-down level, to get a clear sense of direction, because the macro picture, the micro picture, the bottom-up picture is so confusing at the moment. Trying to get a handle on what is happening here, I think, is really difficult for a market that has been very macro-driven for a very long time, Tom.
in terms of that cyclical tilt that we're starting to see again reflected in the sector-by-sector breakdown, with energy up 0.4, you've got utilities gaining 0.3%, banks also up 0.3. These are modest gains to go, of course, across the sectors. Personal care and drugs, that sector up 1.2%. Basic resources now top of the list. We've seen moves higher, particularly in silver this morning. Basic resources, the top gainer across your sectors so far, up 1.2%. And no big surprise, it's technology on the downside, once again, as a sector, lagging by 0.7%, Anna.
Yeah, we might have some decent volume going through some of those individual names that we were mentioning, because I don't see an opening price on any of the three that I talked about. Dassault Systemes, Siemens Energy, LSEG, waiting for some clarity perhaps on where those go at the start of the trading day. And yes, to the point we keep making, the sector breakdown is entirely split. Half the sector's going higher, half the sector's going lower, as the stories sort of bubble up within that structure.
Tech is down there more broadly. So if you take a look at the top, in terms of the points drop this morning, SAP and ASML are the two biggest that we're seeing. Siemens is in the mix as well. Some of the defence stocks are there too. But on the upside, it's a real mix as well. Delhaize is having a good day.
Capgemini also negative, and I wonder if if there's some read across from the Dassault Systemes story, if people are trying to join dots there, or doing what they did last week, which was sort of selling all things and then asking questions later.
Yep. Delhaize, to your point, and we've been talking about the consumer in the US, that K-shaped recovery. Or the K-shaped shape of the consumer in the US, and we had the retail sales coming in softer. But Delhaize, with that big exposure to the US market, and as one of those staples, essentially, in terms of being a grocer there, performing quite well and coming out with decent results. And as a result, to your point, up 7.2%, one of the best performers right now.
We have weakness coming through in some of the house builders today. So Barratt Redrow, I can see, is down by 5%. We had an update there. They were sticking to the guidance on the number of units planned, but something in the numbers went down badly with the market, and that stock down by 5%. So there's lots of bits and pieces happening this morning. We'll wait for clarity on some of those stocks in focus. Paul Markham joins us, Investment Director and Head of Global Equities at GAM Investments. Really nice to have you with us, Paul. Thank you for being here. So, I mean, the big question we're asking at the moment is around AI and to what extent we can pick the winners and losers. Now, clearly the hyperscalers are doing what they're doing and reassuring everybody they've got the customers for the big capex data center build out that they're doing. But at the more granular level, we're looking at all of the legal services, software companies, wealth managers, and trying to work out who wins, who loses. Are we able to do that, complete that exercise yet?
Well, I think what's happened, Anna, is that the market, as you just mentioned, has moved first and then we'll think about it more profoundly later. I think there are a few things that we can say. One is that the picks and shovels so far have been the way to do that, so that the enablers of AI have been the winners. The hyperscalers have actually been underperforming for the last little while. On top of that, I think some of the software names at some stage will start to catch a bid, and that is something which I think has been really priced in very aggressively on the basis that AI can go straight to the sort of service proposition that business services style companies can offer. I think that actually that's not as easy as it sounds, because data is not so easy to scrape as the market is presuming. I think also there is a sense that, in certain... I think right now we think of AI as being at our service, and I think when we really cross a Rubicon is when it becomes something which becomes a decision maker in itself. And at that stage, I think things like legal services could well catch some attention because that's going to change the regulatory framework. Right,
yes, I was going to say, because regulation would be the thing that might stand in the way of that, and might stand in the way of that until we have a huge track record behind us. That's not the kind of thing that any regulator would take lightly.
That's right. I mean, the training aspect of it is going to be... That's right, they
are. Around these businesses.
But I think that the aspect of AI playing the part effectively of a human in terms of human decision-making process is really critical. And that's going to be something which is going to come around in the next couple of years. And when that happens, I think there'll be a bonanza for regulatory and legally related areas. Not just yet, but I think that will come. And I think that eventually software will find some sort of a level where markets are attracted by the valuation.
Paul, morning. We don't know at this point. That's the problem. So what I hear a lot of is diversify. Is that the right way to deal with this scenario?
I think you might be right there, Guy. I think certainly there's been a lot of stuff in the industrial space in particular, traditional cyclicals, which have been beaten up. What I would say is that one needs to make the difference between buying something because it's come back a long way and is still alive and kicking as a business and has a role in a post-AI environment, instead of buying stuff which is kind of dead. And I think that there are some... I think there are certain areas where the valuations are permanently impaired and the businesses themselves may be permanently impaired. And I think some of the advertising industry falls into that category from my perspective.
What I'm also hearing is there's this narrative going around that what you do is you diversify out of the United States into other markets around the world. And there seems to be this assumption, which I'm scratching my head about, is that the rest of the world is uncorrelated to the American equity market. And if I buy Europe or I buy Asia, it's an uncorrelated trade to what could happen in the US. Is that true?
No, it isn't true. It does have a lower correlation, but it's not uncorrelated.
Right.
And also, something which we should also remember is that in certain markets, particularly Europe and Japan, the sector mix is quite different to what it is in the US.
Yeah.
So that means that the more cyclical or value-oriented parts of the market can do better, and they may outperform at the index level. Below all of that, if you look on like-for-like, apples-for-apples comparisons between stocks and sectors, they're going to be following the US. And you only have to look at what volumes do, what price action does on days when the US is closed, and other markets still do follow the US very, very closely.
Paul, what does that mean about your views on outperformance for other regions outside of the US, Europe, and predominantly Asia as well through the rest of this year? Does that challenge the idea that outperformance can be sustained?
I think if you are able to switch into other sectors which aren't necessarily the recent performers, the stuff that's been correlated very heavily to certain parts of tech, for example, if you're buying at the index level, you might want to buy those areas which are more heavily weighted into cyclicals, industrials, etc. At the stock level, I think that they're going to perform very similarly. I think for Europe in particular, which has been a good performer, I'd be a little bit concerned about strength of the euro. And I think that still is a very, very informative aspect of European markets. We had a guest on yesterday who said it had to get beyond 130 to be a concern because it's just one factor in the mix. What level can a euro dollar? I think from here it's already a problem, and we've seen that coming through in certain companies' results in the recent past. Yeah.
You mentioned sectors or areas or companies that are dead, and you mentioned the advertising industry. To be clear, you think the advertising industry is dead as a result of AI, and is that the right interpretation? Is that what you meant by that? The advertising industry is you wouldn't be buying the advertising industry. To some
extent, the advertising industry was already derating in terms of stock multiples, and the industry was already starting to suffer a little bit at the hands of various forms of technology and also a little bit of disruption around the structure of the industry in terms of the leading companies, the way that the agency model operated, etc. The internet had done some of that. I think that AI just makes the creation and production of advertising campaigns so much easier, and it's something that somebody who's relatively untrained in that space could do with the help of an AI tool.
Can I ask you about something very macro that we haven't talked about yet and has been happening for the last, certainly since the weekend, and that's the fact that the yen has been strengthening, and that wasn't widely anticipated perhaps by everybody given what we'd expected this new Prime Minister to be about, or confirmation of the Prime Minister with a much bigger mandate. And I mention this because it's been so crucial to risk appetite globally, it seems, that people have been able to borrow so cheaply in Japan. And for a long time we've been asking, what difference does it make that it gets more expensive in Japan just like everywhere else? What bigger picture impact does this have, do you think?
There's been so much funding, Anna, of various trades facilitated by a very low interest rate environment in Japan for a long time. We've all heard it talked about so much, the carry trade. And as rates go up in Japan, that is going to continue to unwind. And when that happens, that is yen positive. Whatever is happening on the other side of things with fiscal deterioration, with some inflation coming through in Japan, nonetheless, there will be purchasing of yen by certain domestic and selling of yen by those who have been borrowing in it. And I think that is going to be a dynamic which we need to watch. And I think that something that a whole generation of investors haven't really learnt what to do is how to invest domestically in Japan. And it may well be that domestically focused Japanese stocks that aren't the banks could start to get quite attractive from the perspective of that yen environment.
And does it have an impact on global risk-taking then? I mean, all other things being equal, which they never are, but does it have that kind of impact?
It does. What it also may do is put further upward pressure on the Swiss franc, because that is one, again, which can be used in that same carry trade way. So I think it does upset a little bit of flows around the world. I think if you mix that together with other sources of volatility, such as the rotation coming around from maybe some AI fatigue, shall we say, and also, of course, some disruption in the metals markets, particularly with gold and silver, then that could create some volatility, I think.
How does this all translate? Like, at the end of the day, what happens to indexes? What happens to the Nasdaq, the S&P? What happens to the FTSE? Do we just continue to go sideways, particularly in the States? Is that the trend that we're going to be watching at? What breaks us out one way or the other from this?
I think that there's certainly, you're absolutely right, and you said it at the top of the hour there, Guy, which is that it's a bit like the old analogy of the duck which is looking serene and the feet are going underneath, and you could go a long way to get nowhere. And I think that's certainly a period of time that I would expect to see at some stage. The market's been unprecedentedly strong for some years now, and I would expect there to be a period of consolidation. I think that certainly there is going to be an attraction towards some of those lower multiple stocks in the market, the opportunity for rotation without much visible index level movement, although tech has become such an informative part of the big indexes that what you could see actually is the
index is going down.
Most of the S&P going up and index going down, and that is entirely possible.
What does that do to flows?
On the retail side, that is negative, and particularly I'd say for things like the ETF market, I think that does lead to retail pulling their money out. If you've made a lot of money, if you're a little bit jumpy, you may want to sell, and that's something which could have an impact in the near term, I think.
Great to see you, Paul. Thanks for bringing us your thoughts on what's happening out there. Paul Markham, Investment Director and Head of Global Equities, joining us from GAM Investments. Let's take a look at what's happening with that equity picture right now. This is the picture that we are seeing, and as you can see, there is a lot of red out there this morning. Defence stocks are under significant pressure. Tech sector continues to be under pressure. Even luxury, which kind of bounced around a little bit yesterday with the caring story, is under pressure as well. So Europe is kind of under a little bit of pressure, but again, there are stocks out there that are having a good day today. Ahold Delhaize is not on that list. There are plenty of stocks that are maybe balancing some of the negativity you see on the screen in front of you. Let's get the details of what is happening there. Chloe's here.
Good morning, Guy. We've got the London Stock Exchange Group moving higher this morning, and that is after the FT reported that Elliot, the activist investor, is building up a stake in the company. This, of course, comes as we have got all of these fears around AI disruption for financial services and software firms, but also as LSEG is dealing with that extended slump in IPO activity on that London market. And so this news of this stake being built is being received quite warmly, and we're up about 4.6% this morning for LSEG. Moving on to another big gainer, and that is Siemens Energy, which is up more than 5% this morning after reporting record orders of gas turbines. It's really benefiting from this electricity demand, this surge in electricity demand from data centers. This is, of course, part of this AI boom, and that's one of the big beneficiaries, and so we are up quite strongly there. Heineken is also in the green. It announced that it will cut as many as 6,000 jobs to try and mitigate this slump in alcohol sales, but the volumes for beer are actually a little bit better than expected over the fourth quarter. So that is seen as a bit of a positive, and therefore we are up. However, Lufthansa is down this morning. It is in the red after the pilots have threatened to strike over pensions, and we are down about 3%. And then to finish up, we have got also Gerresheimer in the red this morning. This is a company that makes packaging products for cosmetics and medicines. It's decided to delay its results announcements, and we have got JP Morgan analysts saying that the things are getting going from bad to even worse for the company, and there's so much uncertainty for investors there. And we are down massively this morning, more than 30% for Gerresheimer.
OK, Chloe O'Malley with some of the stocks to watch. We're still waiting for pricing. In fact, we have it now.
Yeah.
Dassault Systems down 18%. There you go. Arguably another victim of the sell-off in terms of software. Of course, this is a industrial software company, so that's weighing on the CAC current over in France. Coming up, AI fears, speaking of which, spark stock sell-offs, as wealth management companies are the latest to tumble. More on what has been released and what it's doing to these various sectors. That's coming up. This is Bloomberg.
Welcome back. This is the opening trade. We are 17 minutes into the opening, into our trading day today on Wednesday, the 11th of February. And it took almost 15 minutes to get an opening price on Dassault Systems. The broader picture for stocks is flat to negative, it looks like. So Stock 600 is down 0.1% or so. And we are seeing some downward pressure being applied by this kind of movement. So, in fact, I'll make sure. Yes, Dassault Systems, that is the right share price, down by 19%. And that on the back of the numbers that they have produced today and the guidance. This is an application software business. Let's talk to Neil Campling about that right now, Bloomberg senior strategist who's been watching this story unfold, as have we this morning. Talk us through what it is they've said and not said then, Neil, that's led to this big move in the share price.
Yeah, well, we've seen obviously threats around AI, sort of around discussions for the last couple of weeks, and any company that comes out with any hint of a negative obviously gets hit hard. Problem for Dassault is they have given guidance for 26 that suggests like-for-like growth is going to be 1 to 3%. Well, sorry, 3 to 5%. Now, that compares to 6% in street models. So at 3%, that's half the growth rate. And the risk, I think, is that 3% could look optimistic because we're going to have to wait until November for the Capital Markets Day to get longer-term vision and guidance. Obviously, that's a long time to wait, especially in a world.
Are they saying we don't know?
I think that's the implication, is probably we don't know what the disruption or the impacts are. And we're seeing this for many software companies at the moment, and that's a real problem because in software, we've discussed this before, investors and analysts need to look at terminal values. They like to look at DCF calculations, and that's all based on 5-10-year projections. And now we're looking at, I think, a sector where we're unknown. We don't know what the next 6, 12, 24 months is going to look like.
Yeah.
And that's why these valuations
how can you give a 5 to 10-year projection in this environment with this AI disruption?
This is the risk. If we go back to ChatGPT's launch in November 2022, there was an education company called Chegg that came out in May 23 and said, we see AI disruption today. Since they announced that, the CEO came out and said that, the stock has lost 98% of its market cap. Oof. And that's what happens when you are disrupted. And that's the issue that you have when we don't know who the winners and losers will be at this stage.
And do earnings, well, I was going to say, do earnings updates then help to tell us the answer? Well, Dassault suggests not, because we haven't got enough clarity, really, for the company to be clear, to give clarity to the markets about where it expects to go. Because I was looking at one company, which is AI infrastructure related, but is software, and that, yesterday, that was Datadog over in the United States, and that stock really jumped on the back of its earnings report. And it's in that software basket where there'd been a lot of nervousness. Yeah. But it seems interesting that some companies then are going to be able to give some, have visibility.
Absolutely. And actually, Datadog announced a deal with Anthropic. So you're seeing some AI companies that still rely on these data feeds, etc., that take place. So it depends on the company. As we see with every innovation cycle, there are winners and there are losers. And it's trying to work out which ones they are, and that is difficult. But any company that disappoints, even at the margin, does get, it is that case of sell first, ask questions later.
Do wealth managers have to fear for their future? How worried should we be about Hazel?
I think AI tools will impact the lower margin products, but the question is, will you give your wealth to be managed by an AI bot? I don't think you will.
The financial markets already use huge amounts of artificial intelligence and have done for years. Of all the sectors in the world that you would have thought would actually be there for transformation to be delivered by AI, it would be the financial services sector, wouldn't it?
Absolutely. There's lots of tasks that can be used by AI. But we've had AI in trading for many years. Yeah. We use black boxes, we use dark pools, etc. That makes But at the end of the day, why do investors and portfolio managers go to the brokers still for trading today? They want their orders managed, not just put through a pipe. So there is still value. It's working out.
Well, I suppose this goes back to the conversation we were having with guests earlier about the moats that are around these businesses. Yeah. So there'll be some businesses that have no moat, and their lunch can be eaten by others. Whereas there are other business models where they will have a moat, and some of that will be their stickiness. The extent to which these customers are already invested in this product, the extent to which it goes right through their business, and ripping it out would be costly in itself.
Yeah, absolutely, and it is definitely that digital moat and that business moat that is the key. There are companies that clearly have that moat, but there are many Me Too's that don't have that moat. So the winners become very, very powerful, and we've seen the AI enablers that have benefited from these moves so far. But it's where those companies affected by the disruption that get impacted at the margin.
St James's Place is currently down 7.2%. A lot of it's going to come down to talent as well. So the companies that can attract the talent can actually make these transformational changes and actually produce these AI products. And I was speaking to a venture capitalist yesterday who was saying private equity-owned software companies are struggling to hire good talent because they're owned by private equity. You don't have the incentive upside. And so those are very vulnerable.
So you need stock to be able to
in that particular VC's view. Yes, because if you're a software company owned by PE, you don't have that upside potential. They're not hiring the best engineers, and they are very vulnerable, is the view from one private investor. So I think talent is another factor. Can companies like St James's Place hire the kind of talent that's needed to actually build out AI-enhanced products for their customers?
This takes us into deep territory, but I was quite taken by the opinion piece by Paul J. Davies this morning that talks about where the financial services sector goes. And he was talking about, yes, the financial services, to your point, Neil, has a long history of reinvention, and it does that pretty well. And Goldman Sachs was talking about that also. But then saying, does this take us, if we're talking about white-collar jobs en masse, does this take us into new financial models for countries, essentially? Do we have to move to a different form of remuneration? The UK is really exposed. But he starts talking about, universal basic income. That starts to get politically very complicated. But these are the kind of conversations that are happening even, within financial services circles right now.
It's fairly easy to understand why. And at what point does society go, no, we don't want to do this?
You need buy-in for this kind of technology.
And also,
at some point,
there's this kind of view that companies, that consumers will lose, that companies will make lots of money. But ultimately, you need the consumer to be able to sell stuff to. So if the consumer's on universal basic income, do companies really make a lot of money? I don't know. It doesn't feel like it fits together to me.
We have a question from a viewer, Neil. Does your guest, you're a guest, I guess, technically. Do you believe, Neil, that AI, as of now, cannot compute market sentiment, and as trading will always have a weight towards such tendencies, AI may not help in that respect? So I guess it's a question around AI assessing market sentiment. Do you have a view on that?
Yeah, absolutely. Obviously, we use AI internally here at Bloomberg to help with some of the tools, but I can tell you right now, often the AI trying to read and understand a price action on a stock, on an equity, actually gets it wrong. You have to talk to people in markets to get a broader understanding of sentiment of what people are doing to explain the price action related to a stock price move. Sometimes it can be an obvious, but actually, in the majority of occasions, look at the IB chats. You have to get human understanding of relating.
It's going to get better at that, isn't it? That's the whole point, isn't it? It will improve. It will learn.
We watched a robot do a cartwheel yesterday, Neil, and a backflip, and that apparently was learned behaviour. So we'll see. This is having an impact on others in the sector. So just to make that point, software and IT stocks are more broadly down. So Dassault Systemes, of course, is the poster child for this now, down 19%. But we've got SAP down 2%, again, Sage down 2.5%, Capgemini 3.3%. So this is having something of an impact. And to your point earlier, commentary from, for example, JP Morgan saying this is worse than even the most negative that was feared around specifically Dassault Systemes.
Yeah, I mean, it was because we'd already had low expectations for Dassault. So this is clearly a very, very poor update for that. And again, the nervousness around investors is, I don't want to sit here and wait to see what comes next. I'm getting out. And actually, unfortunately, one thing that, with the sell side being reliant on, their recommendations, if you look at it, only 2 analysts, I think, had sell ratings on Dassault. You had about 24 that had hold or buy ratings. So again...
So the humans are doing a great job, are they?
Humans are doing a great job on that occasion, absolutely.
Neil, thank you very much. Thank you for joining us. And we've lingered on this subject, and we thank you for doing that with us. Good to have you on the programme with us. Coming up on the programme, we will turn to the subject of Siemens Energy. We've had some strong orders coming through. The CEO joins us next. This is Bloomberg.
Welcome back. This is the opening trade. We are 30 minutes into today's session. Happy Wednesday. European stocks across the benchmark down 0.2%. The DAX is down 0.4, dropping 91 points. Over in France, the CAC 40 falling 0.4%. Dassault Systems is weighing on that index. Here in the UK, a lift coming through from the energy sector and basic resources, 2 leading sectors right now in the session. The FTSE 100 is up 0.2%. Guy, what are you seeing?
2 to 1 down. That's the ratio. That's what we're looking at within these markets. There are obviously some big single stock sector stories, single stocks and sector stories that we're watching, particularly around software. There you go, 214 up, 378 down. Volumes reasonably kind of even this morning. The leader. Let's start with a positive. Let's put a positive spin on this morning. If you're in the grocery space, you're having a good day. Del Hayes is up by nearly 7.5% at the moment. It is doing very well. Siemens Energy. We're about to talk to the company's CEO. Huge numbers of orders coming through for gas turbines. Did I see 25% of those are coming from the AI story? That's fascinating. Heineken's also up. Job cuts coming through. The volume story actually may be the biggest driver of this, though. We're seeing maybe volumes coming down a little less than anticipated. That's giving Heineken a bit of fizz this morning. Let's talk about where we are seeing the weakness. The standout story is obviously in Dassault. Do not confuse this with Dassault Aviation. This is Dassault, the software company, and it is down now by 21%. I'm rounding up a little bit, but 21% of the Dow's a huge move in that space. We talked about the software story and how it's affecting wealth managers. St James's Place is down by 8% this morning. That stock's been incredibly choppy over the last few years. And Lufthansa, its pilots are worried about their pensions and their strike action once again hanging over this airline, the German flag carrier, down by 2.25%, Anna.
Guy, let's get an update on some of the other stories we need to keep in mind this morning. The Financial Times is reporting that the activist hedge fund Elliot Management has built a, quote, significant stake in the London Stock Exchange Group, or LSEG. The stake comes as the UK company contends with fears over disruption from AI and a lacklustre listings market. Bloomberg LP, the parent of Bloomberg News, competes, of course, with LSEG in providing financial data. US House lawmakers could vote as soon as Wednesday on whether to reject some of President Donald Trump's tariff policies. The votes come after lawmakers last night rejected a last-ditch effort from House Speaker Mike Johnson to prevent them from carrying out this move. Meanwhile, the European Parliament is moving closer to approving a trade deal with the United States after senior lawmakers agreed to make some changes ahead of a vote planned this month. And Bitcoin has drawn fresh support from some of its largest holders, though the return of demand remains narrow enough to raise doubts about whether it marks a recovery or mere damage control. So-called whale wallets accumulated about 53,000 coins in the past week, their biggest buying spree since November. Bitcoin is roughly 40% below its October peak. And actually, despite that buying by those so-called whales, Tom, that is not helping it this morning. Last time I checked, it was weaker.
Yeah, the OG of the crypto space down 2.6% right now at 66,800 for Bitcoin. Let's get to the AI story. This is an AI story. Siemens Energy is on track for another year of rising revenue as surging electricity demand continues to bolster sales of its gas turbines and power grid products. Group orders jumped by over a third to 17.6, just shy of 18 billion euros. Let's bring in Siemens Energy CEO Christian Bruch. Christian, good morning. The stock is up about 160% year to date. We can add on the moves today, of course. Are you essentially an AI stock at this point, Christian?
Good morning. Thanks very much for having me. No, not really. Even so, I would say the AI is the cream on the cake for us on the orders. And you have seen it in the gas turbine orders. It's roughly 25% of the order book today is related to data centers. But keep in mind that actually the industry was actually much more designed to be a 60 to 70 gigawatt market not so long ago, right? And now we look into 100 gigawatt markets, and that is really a lot driven by the data centers. But important to note is that a lot of orders actually come not from the data center side. The largest order on the gas turbine side this quarter has been Europe non-data center. So it's a little bit more diverse, the picture, but I'm super proud of what the team has achieved to really build a position from ourselves in the data center market.
Yeah, and look, we're admittedly slightly obsessed with the data center story, given all the ruptures we're seeing in the markets. Christian, what are the risks that order backlog, as substantial as it is not converted into sales? What kind of risk are you putting on that as some out there question the spend and capex around data centers?
Yeah, first of all, I have to say, so far we see reservations converting more or less one-to-one into effective orders, and I have not seen any cancellations yet. And I would always say, as much as I understand the question around is there a bubble, is there a risk in there, electricity will be needed. Might there be, let's say, ripples along the road in terms of companies are changing? Might be, right? But for us, delivering the underlying electricity to these data centers, I'm relatively comfortable looking forward that this power will be needed. The other question you always also have to ask ourselves, what if we cannot supply the electricity to the data centers? Because AI is going to be around us at whatever level we're going to need it. So I think it's really important that we fuel that industry to grow and prosper. And in that regard, I feel comfortable if I look on our backlog on the AI side.
Christian, good morning. It's Guy. Can you deliver all the orders you're getting at the moment? If I come to you now and ask for a gas turbine, when am I going to get it?
Well, we will have a debate, let me put it this way, right? And obviously, we mainly discuss about 29, 2030 delivery. There's here and there some slots which we try to accommodate in 28, and we try to create as much flexibility for our customer as possible. What our benefit is in that area is we have a relatively broad portfolio from very small gas turbine to large gas turbines. The large gas turbines are the most sold out, so we try to find solutions where we go to smaller turbines and still serve the customers. But absolutely correct what you're asking. Execution of all that backlog will be a significant stretch to the industry, and it's not just about us, It's also about the construction companies, civil companies. We will have to see over the next 12 to 24 months, how do we grow this industry faster?
Okay, and is the challenge within the supply chain, your supply chain, or is it within your factories? Where are the bottlenecks?
If you look to our products or the gas turbine itself, the biggest constraint I see at the moment on the component side, if it comes to blades and vanes or larger forgings, which is a limited market in terms of suppliers which are active there. And that is what we're trying to expand. And you may have seen our $1 billion announcement in the US. Part of it goes into exactly expanding that supply chain. And we also obviously have a factory ourselves on blade and vanes, which is not sufficient to supply us completely, but to a certain extent, also that we are expanding. And that will be key to grow that supply chain first. I think on the assembly side, we have some more flexibility.
Good morning to you, Christian. Can I ask you about the after-sales market, the services side of the business? What are you expecting to see there? How predictable is the revenue? How fast can it grow?
Yeah, I mean, that is obviously the good thing about this business. Keep in mind, this is today roughly a 60% service business on the gas services side. And obviously, with all the new units coming now into the market, we will have a significantly growing service business thereafter. Keep in mind that a lot of this service business you're only going to see after 28. We guided in the midterm until 28. A lot of the positive effects from the service side you're only going to see thereafter when the new units come into operation and they go into the first turnaround. But that is actually the nice thing about the business, that we sit on a fleet which afterwards will be serviced from us nicely.
Can I ask what conversations look like about supplying to the wind industry in the United States right now, Christian? How difficult to navigate is that territory?
Yeah, first of all, the most discussions we have is executing what we have on hands, right? In terms of getting through the orders, particularly on the offshore side. That is something which are wind parks nearly completed, which we obviously want to get through. On the onshore side, you may know that our position in the US is a little bit muted simply because after our challenges in the onshore wind businesses, we did not push a lot for the new onshore business. That helps us now in the current situation. So what we are discussing at the moment is mainly repowering projects. So using existing sites and repower this, that is our main business in the US. In that regard, I have not a major concern on our wind business in the US at this point in time.
Christian, I want to go back to the demand that you're seeing for those gas turbines. Guy Johnson's mansion will not be receiving its mini gas turbine until maybe 2028, 2029, 2030. You said you need to invest, you and the industry need to be investing more. You're investing $1 billion in the US, as you mentioned. Are you going to be investing a similar amount in Europe? What is the investment determination from you and the team?
Yeah, I mean, overall, over the next 3 years, we indicated that we're going to invest around 6 billion euros in the different factories. Obviously, we're trying, first of all, to expand all factory footprints, what we have, to have a capital effective use, really. And this is what we're trying to do. So it means, yes, we are also investing in Europe. Yes, we are also investing in Asia. Yes, we are also investing in the Middle East to continue to do this. I also said when I was talking about the 1 billion in the US, there might be more coming depending on how the market develops, but we are firing on all cylinders across the board.
I think I've got a Siemens fridge. Very different business. Very different business indeed. Completely different business. Christian, thank you very much indeed. Thank you very much indeed for spending some time with us this morning. We'll look forward to seeing...
Wait, how big is your fridge if you need a gas turbine for it?
It's big.
Can you wait 5 years?
Big. Yeah. It's a problem. You've got powering it's massive, like it's a data center. I don't know. I guess the pivot from that is Total Energies, Total. I suppose it's a fairly easy one. Gas to Total, they make gas. We're kind of dealing with the entire supply chain here. The company on the move this morning after slashing its buyback to 750 million in the first quarter of this year. That's after lower oil prices hit profits. Fourth quarter net income dropping 13% year on year. Mitchell Furman, our European oil majors reporter, joining us now. This doesn't sound good, but this is a market that's meant to be doing fairly okay at the moment.
I mean, Total's shares are rising this morning, and their report today marks the conclusion of big oil earnings. And we saw yesterday BP completely halted their buyback and their shares plunged. But Total guided the market that this was coming. Their share buyback was now going to be tied to oil prices, which were trending lower when they said this last year.
Okay, so we saw BP scrapping their buyback, didn't we? And now we see this move from Total Energies. Is everybody pinning this to what were until January lower oil prices? I mean, the BP story is separate, new management, but is that the driving force?
Yeah, for Total, it definitely is. They were very clear in the fall that the buyback would be lowered. They didn't say exactly what. They gave a range, and this is the lower end of that range. So, there is room to run for Total. They're being conservative. Patrick Pouyanné, the CEO, this morning said that the oil markets are seeing some oversupply as well as a buildup on sea of Russian crude due to sanctions. So the market, while it has these oversupply dynamics, there's also the geopolitical risk premium tied in.
What do we see in terms of the valuation gap between European oil majors and their US counterparts? Is that I mean, it's been long running. Is that something that closes in 2026?
Yeah, it'll be a challenge for sure for the Europeans. Exxon and Chevron reported strong results, this last quarter as well, and they have big growth stories. They have production in the U.S., Guyana, the Middle East, and that is going to help offset, potentially lower prices for the Americans, and the Europeans both need to, they're all trying to cut costs as well as ramp up production.
Yeah. Mitchell, thank you very much indeed. We'll watch that. We'll watch that story. Mitchell's not particularly convinced that the valuation gap is going to close this year. Maybe Mitchell Furman, our European oil majors reporter. We didn't even ask what it means for climate change. We're going to break through 1.5 degrees. I mean, that's almost a given. You could get to 2 degrees, 3 degrees, devastation for the oil industry, the energy industry, how they adapt to that, the regulatory changes, they're kind of under pressure. So far, they're shifting away from renewables right now.
Massive shift in terms of the US commitment.
Huge.
Now you've got to pivot from that to
Bad Bunny.
Bad Bunny and Zara T-shirts.
Coming up, it's something that President Trump feels strongly about as well. Coming up, how much are some resellers charging for a Bad Bunny Zara T-shirt? Guy Johnson's been stocking up. And notes following the Super Bowl, the answers when we come back. This is the stat you need this Wednesday. This is Bloomberg. Welcome back. Before the break, we asked you, what are some resellers charging for a Zara Bad Bunny, that's important, the Bad Bunny part, T-shirt and thank you note. Following the iconic Super Bowl halftime show performance, the answer, 30,000 euros, or just over $35,000 US. Inditex owned fashion label Zara collaborating with Bad Bunny on the Super Bowl show and dressed the performer, his dancers, band and orchestra as well. Zara say that they have no plans to sell the outfits commercially. Bad Bunny's role in the Super Bowl also underscoring Zara's growing cultural reach in the US. Guys digging deep to see if he can afford a $30,000 Bad Bunny Zara
Trying to find
T-shirt.
a link with the US consumer here. What does this tell us?
Nothing.
I don't know. I have no proof that they were US sales. I mean, maybe they.
I got nothing on this. White tie. Maybe we could start doing that. Maybe that's the way forward.
Go with the white tie.
Yeah.
And that pose.
That
maybe
pose.
not that.
I think on set that would get out really well. On a Bloomberg set. Anyway, how do I pivot from this to that? I have no idea, so I'm not going to. Okay. All 27 EU leaders apparently are going to be wearing those white ties. No, they're not. They're going to be meeting at a centuries-old Belgian castle today for a day-long retreat, which is going to discuss ways to integrate EU markets. I feel we've had this conversation before. This comes as European Council President Antonio Costa said the bloc needed to unify its markets to compete is necessary to compete globally. Let's talk about this. Ollie Crook is here wearing a red tie. Good morning.
Yeah, good morning.
So what are we going to get out of this?
Yeah, indeed. I mean, listen, so basically the way that Antonio Costa wants to frame this, and of course he is the sort of great shepherd of the 27 EU members to try to get this collective action over the line, and his ambition is to try to move the focus from defense, which was last year, trade last year, and then moving it into competitiveness. That obviously is a much thornier issue. There are a lot of complexities, whether it's completing the capital markets union, sort of destroying internal barriers, they want to cut red tape, all of the things that we've really talked about a great deal in the past. This is the ambition to really focus on that this year. Last year was about defense. That's what it's about now.
We've done defense, yeah?
Apparently, right. No, but that's basically how he's sort of trying to frame it. The difficulty is, of course, that is the more complicated bit. What I think is also interesting is that Macron and many others, they want to capitalize on what Macron has now branded the Greenland moment, right, which is getting this impetus and this enthusiasm through and really getting these European leaders to move this stuff forward. I think there's also another Greenland moment, which is not just about Europe, it's also about the broader multilateral system. And I spoke to Antonio Costa because we had that really rousing speech from Mark Carney in Davos that was big on ambition, big on ideas, little on execution of what that actual world looks like, that multilateral world led by middle powers. Antonio Costa's job is to sort of guide middle powers, so I asked him what that world could look like. Have a listen.
I'm not so pessimistic as Mark Carney has been, and I don't said that the rules-based order is died, and we need a new one. Of course, is under threat, but I think we are strong enough to protect the rules-based order, because we don't have a real alternative to the rules-based order. The alternative is the chaos, and that's why like-minded partners like the European Union, United Kingdom, Canada, Japan, and other countries are very strong upholding the international rules-based order. One of the reasons, because we are investing a lot in these trade agreements, is because we need a rules trade order to ensure predictability to the economic agents. It's impossible to have a strong economic growth with uncertainty. And we need to provide certainty. And the best way to provide certainty is to protect this international rules-based order also in trade.
So really taking that momentum of that Greenland moment, that of course puts into the fore the main debate we always have in Europe, which is about joint debt. Macron is saying that this is actually the moment that we need to see that. And actually, when you speak to finance ministers over the last 12 months dealing with Trump, that seems much more likely to try to get some of these investments going.
Yes, maybe Canadians are thinking about whether they need to, join the EU or just maybe work more closely with it. Let me pivot the conversation to the other thing that's on their agenda, and that's very much Ukraine. Yeah. What are we going to hear, or what did Costa have to say about the future of Ukraine?
Yeah, so basically how he sees that the sort of Europeans get their seat at the table and actually can contribute to this negotiation process and actually have some input is basically by bringing Ukraine into the European Union, the accession talks that are happening. There's a lot of debate at the European level of how exactly to go about this because, of course, if you sort of fast-track the Ukrainians into the system, it really is going to make a number of other candidate countries very, very unhappy. So they're discussing different ways of maybe a tiered system where maybe the Ukrainians get some benefits of being part of the EU. And this is, of course, a very lively debate because some people are very in favor of that. There are some, of course, who are very against that, like Hungary. So the real question is, are they going to find ways around that? That is going to be one of the big debates that they're going to be expanding on Thursday when they meet in Belgium with potentially white ties.
Oliver Croak, thank you. Well, we'll watch the tie action, certainly. Oliver Croak, Bloomberg's chief Europe correspondent, thank you very much indeed. Here's what else to think about then. As Ollie was saying, EU foreign defence ministers meeting in Brussels. Netanyahu, the Prime Minister of Israel, of course, and President Trump will be meeting in Washington, D.C. And later, on the earnings front, out of the US, McDonald's. We also have software firm Snowflake reporting later today. And at 1:30 p.m. on the data front, it is the delayed January jobs report in the US. And there's a Treasury auction at 6 p.m. UK time as well of 10-year debt stateside.
Yes, so the debt issuance coming on the same day we get some data, which is weirdly on a Wednesday, the payroll print on a Wednesday. Let's talk about that and what else we're watching in markets. Skylar Montgomery-Coney joins us from Markets Live team. Skylar, apart from the weirdness of getting this on a Wednesday, how are you thinking ahead to the jobs report? We were talking earlier in the programme about how there's going to be so many odd things about this print that it's going to be quite difficult to make sense of.
Yeah, I mean, I think the headline number that you really care about is unemployment, but of course you get the revisions to previous numbers, you get the actual NFP. I think it's important to think about what context this number comes in. So we had retail sales yesterday that disappointed to the downside, and you also had jobs data last week that again was on the weaker side. Now the feed through to ADP to NFP isn't great, but it has had an impact on the whisper numbers. We talked about it having reduced 20,000 on those jobs numbers. It reduced a further 10,000 yesterday post-retail sales. So the whisper number is now 30,000 below consensus estimates. So that's a relatively low bar, I think, for the numbers to come in and beat. And I think also that pricing for the Fed has remained very sticky, where you don't expect a cut until after Powell's term. So I think you need a really big downside surprise to have that shift.
Okay. So how's the market positioned? What causes a surprise?
I think if you have an unemployment rate that ticks up, that's very negative for growth.
Now?
Yeah, something like that, yeah. Mm-hmm.
Okay, so a higher unemployment number is what people are going to be watching out for.
Yeah, I mean, obviously you care about the other numbers as well. Yeah, exactly. Because if you think about what the Federal Reserve is looking at, they're thinking about a labor supply that's coming down quite significantly as immigration comes down as well. And you're also having less labor demand. And so you're thinking about what is the balance? How does that feed into the unemployment rate? Because what really matters for consumption is, are people employed? Are they getting paid? Now, the retail sales were a little bit more concerning, but on aggregate, consumption and growth looks pretty good. So I think you need to have some sign that that feedback loop becomes negative to get very concerned about the economy and to expect more cuts.
I've just heard anecdotally from young people, family in the US, in their kind of 20s, they're finding it really hard to find jobs. It's just anecdotal, but that at least is some of the feedback I've been hearing. Scarlett, are you less or more clear about the direction of travel for equity markets after today?
I think we'll get a better, I'm thinking, I think you need a lot of data moving in a negative direction to price more cuts, and for bad data.
Aren't cuts good?
I think if you cut below neutral, that's bad, because that tells you that you're going towards a recession. And so the amount of cuts we have right now is the low end of what you can price without assuming that you're going to get a recession. So if you transition to recession territory, I'd get very worried about equities. I just don't think 1 week labor market print is what's going to do that when you have aggregate growth that's quite strong.
Scarlett Montgomery-Coney, thank you very much indeed. Plummet Markets Live. Team. So the displacement story and that anxiety continues, and we're seeing that reflected in Dassault Systems. We're seeing that reflected in St James's Place. Dassault Systems down over 20%, 21%. St James's Place, wealth manager, of course, on the back of the news around this AI piece of software that could challenge that space, down 9%.
There's a story we haven't talked about this morning much, which is nickel. So nickel's going up because the Indonesians basically are putting reducing mine permits for its biggest mine to produce nickel.
They want prices up.
They want prices up. So but this speaks to the idea that countries are going to control resources in a way that they haven't done before, which I think is really interesting.
Critical minerals means something quite specific, but lots of minerals are critical, it seems, in the stage of the economy we're at right now. Wednesday, 11th of February, that is it for the opening trade. The Pulse is up next. They'll continue to track that Dassault Systems share price, no doubt, and take you towards the start of US trade. This is Bloomberg.